Welcome back to the channel. I'm Algabot, and today we're breaking down an expert advisor for MetaTrader 5 called Chaikin Flow Pullback. This is a money flow, trend continuation strategy that blends two ideas into one clear plan. Conviction that comes from the Chaikin Money Flow indicator and precise timing that comes from an exponential moving average. Over the next few minutes, you'll learn how this approach reads buying and selling pressure, how it waits for a shallow pullback before it acts, and how it defines its risk using the average true range. Everything here is educational information only, so let's dive in. So what does this expert advisor actually do? At its heart, Chaikin Flow Pullback is designed to trade in the direction of the prevailing money flow and to enter on a small dip rather than chasing an extended move. It works on a single time frame, which means you choose the chart period and every calculation runs on that same period. The first ingredient is the Chaikin Money Flow indicator. This gauge looks at where each bar closes inside its own range, and then it weights that reading by the bar's volume. When buyers repeatedly close bars near the highs on strong volume, the money flow reading stays positive, which the strategy treats as accumulation. When sellers repeatedly close bars near the lows, the reading turns negative, which is treated as distribution. It's a cleaner pressure gauge than price alone, because it combines closing location and volume into a single number. The second ingredient is an exponential moving average. Inside a confirmed money flow regime, the strategy waits for price to pull back and briefly lose the moving average, and then reclaim it in the direction of the flow. Buying the reclaim, rather than the extension, is what keeps the risk small and clearly defined. This approach is analytical and rules-based, so it may appeal to traders who prefer a structured, mechanical framework and who want to study how money flow and a moving average can work together. It is not built around prediction or promises. Instead, it simply reacts when its specific conditions line up. Because it holds only one position at a time and attaches a stop and a target to every entry, it favors patience and discipline over frequency. As always, remember that trading involves risk. Losing trades are a normal part of any strategy, and nothing here is financial advice. Let's walk through the exact logic, step by step. The expert advisor makes its decision once per completed bar, so it isn't reacting to every tick. On each finished bar, it checks three things: the Chaikin Money Flow reading, the exponential moving average, and the average true range. The first gate is the regime. The strategy measures Chaikin Money Flow over a window of, by default, 20 bars. For a long, that reading must be at or above a positive threshold, which defaults to 0.05. That confirms an accumulation regime, where buying pressure is dominant. For a short, the reading must be at or below the negative of that threshold, confirming a distribution regime. The second gate is the pullback and reclaim, and this is where the moving average does its work. For a long, the strategy detects that the prior bar closed below the exponential moving average, showing a shallow dip against the trend, and then it requires the just closed bar to reclaim the moving average, closing back above it with a bullish body, meaning the close is above the open. That combination is the long signal. The short side is a mirror image. The prior bar closed above the moving average, and then the just closed bar loses the moving average, closing below it with a bearish body. That is the short signal. Now for risk. When a signal appears, the strategy sizes its stop from the average true range. The stop distance is the average true range multiplied by the stop multiplier, which defaults to 1.5, and it is never allowed to be tighter than the broker's minimum stop distance. For a long, the stop sits below the entry and the take profit sits above it. For a short, the stop sits above and the take profit sits below. The take profit is placed at a reward to risk multiple of that stop distance, defaulting to 2 to 1. So the target is twice as far from entry as the stop. Finally, the expert advisor holds only one position per magic number at a time. It won't stack trades or add to a position. Volume is snapped to the symbol's allowed step and limits before any order is sent. It's a compact, disciplined structure. Confirm the flow, wait for the reclaim, define the risk, and let the trade play out to either the stop or the target. Let's read the code the way you would in MetaEditor. At the top are the input parameters. You can see the Chaikin Money Flow period set to 20, the money flow threshold at 0.05, and the exponential moving average period at 21. Below those are the average true range period of 14, the stop multiplier of 1.5, and the reward to risk ratio of 2, along with the default trade volume. Now look at the two signal lines. The long setup is true when the money flow reading is at or above the positive threshold, and the prior bar's close, C1, is below the moving average, and the just closed bar's close, C0, is back above the moving average, and that bar has a bullish body. The short setup is the exact mirror. The money flow reading at or below the negative threshold, the prior bar above the moving average, the just closed bar back below it, and a bearish body. Underneath, the risk distance is the stop multiplier times the average true range, but never tighter than the broker's minimum stop. On the buy side, the code takes the ask price, places the stop below it by that risk, and sets the take profit above by the reward to risk ratio times the risk, then calls trade.buy. The sell side is symmetric. It uses the bid, places the stop above, sets the take profit below, and calls trade.sell. Same structure, opposite direction. Let's walk through this chart candle by candle and watch the strategy trade both directions. The blue line running through the candles is the exponential moving average, and the gold line in the panel below is the Chaikin Money Flow reading, with the accumulation zone above the plus 0.05 level and the distribution zone below the minus 0.05 level. Start on the left. The first two candles push higher and close above the moving average, and notice the money flow reading sitting comfortably in the accumulation zone, above the positive threshold. That tells the strategy buyers are in control. Now the third and fourth candles form a shallow pullback. On that fourth candle, the one just before the buy marker, price actually dips and closes below the moving average. This is the setup the strategy is waiting for. A small dip against an accumulation trend that briefly loses the moving average. Then comes the reclaim. The next candle opens lower but rallies back and closes above the moving average with a bullish body. Its close above its open. All four conditions now line up. Money flow is still in accumulation. The prior bar closed below the average. This bar reclaimed it, and the body is bullish. That is where you see the buy entry marker appear. The stop is placed below, a set multiple of the average true range away from entry, sitting just under that pullback low, and the take profit target is set at twice that distance above. From there, watch the two candles after the entry. Price extends higher, closing strongly, and money flow stays firm in the accumulation zone, confirming buyers are still pressing. Price reaches the take profit target at the take profit marker, and the long trade is complete at a reward that is twice the risk taken. Now the regime begins to shift. After that high, the candles start to roll over, and look at the money flow line. It falls out of the accumulation zone, crosses through zero, and drops into the distribution zone below the negative threshold. Sellers are now dominant. Price bounces once, and the candle just before the sell marker closes back above the moving average, holding it briefly. That is the mirror image of the earlier dip. Then the decisive candle forms. Price loses the moving average, closing below it with a bearish body. It's close beneath its open, while money flow sits firmly in distribution. Every short condition is satisfied, and the sell entry marker appears. This time the stop is placed above the entry, again a multiple of the average true range away, just over that small bounce high, and the take profit target is set the same reward to risk distance below. Follow the final candles down. Price slides lower bar after bar, money flow stays pinned in the distribution zone, and price reaches the lower take profit target at the second take profit marker, completing the short trade. Notice what both trades had in common. The strategy never bought the top or sold the bottom. It waited for the money flow reading to confirm one-sided pressure, then it entered only on the reclaim or the loss of the moving average, keeping the stop tight and the target a fixed multiple away. That is the whole idea of a pullback continuation approach, shown here purely for educational illustration. So that's the Chaikin Flow Pullback Expert Advisor. We covered how it uses the Chaikin Money Flow indicator to confirm an accumulation or distribution regime, how it waits for a shallow pullback that loses the exponential moving average and then reclaims it, and how it defines every trade with an average true range stop and a reward to risk take profit target. We also read the core code and walked a long and a short example on the chart. Remember, this video is educational information only and is not financial advice, a recommendation, or a solicitation. Trading involves risk, and losing trades are a normal part of any strategy. If you found this helpful, please like the video, subscribe for more MetaTrader 5 strategy analyses, and leave a comment with the strategy you'd like next. Learn more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.